Alright everyone, welcome back. Remember last time we borrowed some money and we got some equipment. Now we gotta pay the people back. And yes, do pay your bills. It's important to pay your creditors back. Why? Well, because you want them to give you credit next time. And you don't want them to go, you know what, Bill, you just don't pay your bills and you're too big of a risk to give credit. Sorry, your application's denied. Insurance companies also look at businesses' credit. In some states, that's also personal lines, but in commercial, it's all 50 states. They look at credit to see if you're going to pay the policy on time. If your credit's bad, you could end up paying the whole policy off. They will not extend terms to you. So just remember that. Now we're going to pay down our accounts receivable, or accounts payable, that we borrowed last time. So let's look at this example. We had $93,500 in cash. We are going to pay cash to our accounts receivable or accounts payable account that we borrowed to get this equipment, $6,000. Remember that. And we paid $2,500, so now we owe $3,500 instead of $6,000. We have $91,000 in cash. We still have $15,000 in supplies. We still have $11,000 in equipment, all assets. Here's your liability, and they equal out. Remember, debits equal credits. Debits on the left, credits on the right. Alright, so we're going to get into something new, prepaid expenses, and expenses in general. Now, you're going to have, you could possibly have, depending on where you rent, a water bill, trash bill, trash and sewage, plus the office space you rent. Now, some places will just incur that expense and then just charge you for it on your rent. So you'll pay a little higher rent to cover those expenses. Why should businesses keep their expenses low? Well, they have cash flow, and they only have so much cash flow that they can bring in. Because sometimes you're going to have slow periods, like in November, December, January. You know, everybody's taking off for Christmas and stuff, and they're not doing business, so you may have a little bit of a slow time, depending on your industry. So it's important to keep your expenses low because you want as much cash flow, you want as much profit as you can possibly bring in. Now, if you're a nonprofit business, obviously this is going to be a little bit different for you, but most businesses are for profit, and you don't want to burn a hole in your pocket with unnecessary expenses either. So let's take a look at example of prepaid expenses. So this example is going to look at rent. This is probably the easiest now. It's $4,000 a month, and we're going to pay 2 months in rent. So we had $91,000 in cash. We said, okay, landlord, here you go. Here's 2 months prepaid. So before the expenses incurred, now brought us down to $83,000 in cash. And we still have $1,500 supplies. We now have a prepaid expense account for rent, and it has $8,000. And this is an asset, because remember, the expense is not incurred yet. So this money is just sitting, just waiting to be put towards rent for that month. And there's 2 months worth here, so each rent is $4,000. We also have our equipment, our asset side, and our liabilities. We have the $3,500 because we paid down the accounts payable. And we still have a capital of $100,000, and they balance out. So prepaying your rent is great. Some people probably prepay it a year. Just like here, I don't want to deal with writing a check every month. Here you go. Here's $12,000, $14,000, whatever the number is. But they make their rent for the year. Some will prepay 2 months. And it's kind of a good idea. So you give them $8,000. You got 2 months or almost 3 months to come up with the next rent. So you have a little bit of time to get your capital together, or to get your revenue and income together. And that's about it for this lesson. This lesson's kind of short, but I just wanted to go over that with you. So thanks for watching, and see you next time. We're going to make some more. We're probably going to get into a little bit more of what's the word I'm looking for? Normal balances. We're going to get into normal balances. So like assets are going to have normal balance of a normal balance of supplies, and it's going to be normal balance. It's always going to be creditors, always going to be debit. We'll get into that. So thanks for watching. See you later.